What's going on, everybody? First off, happy Thanksgiving. I hope you guys are all enjoying the day off from the markets, getting your eyes off the charts. Before I dive into a few plates of food here and indulge in some alcoholic beverages, I thought I'd get on here and just kind of, make a little video. I did put up a new channel in my Discord. That link can be found down in the description box below. Feel free to join, completely free. I do have two sections, a paid as well as a free area, with plenty of training, good chat, and good community of people there. But I kind of wanted to put up my trading rules and my game plan. I think as day traders, now this video is going to be for scalpers. This video is going to be for day traders, even overnight swing traders. But this is not for the investor who's going to put money into a stock and not check it for a year, 2 years. This is not for people who believe that the company is overvalued, so you think you should short it. This is not for people who believe that there's some massive short squeeze coming, or the suits are doing this and that or whatever. I'm not that kind of trader. Nothing against those investors or traders, but it's not my game plan. My game plan is a scalper. My game plan is to be a day trader, to kind of get in on momentum, get in on trends, kind of take a little bit of profit where I can, and then kind of move along and trade some of the same stocks over and over and over. So I'm just going to kind of go over and read my trading rules. Now, these rules I do have written down. These rules I have saved in two places. One, I have a document saved on my computer, so I have it on my desktop, kind of open up that file and read it every morning pre-market. I do also have a printout. These rules are on a laminated piece of paper, and it sits kind of on my trading desk. So during certain times, maybe when I feel antsy or feel rushed or feel that I need to put on a trade, I'll kind of go through and read these. Sometimes when I'm currently in a trade and it's chopping around, it's not really doing what I want it to do, I'll go through and sort of read these rules and just kind of reiterate them. So I'm just going to go ahead and read them in no particular order to you. Not one of these rules is more significant than the other. And the reason why I'm reading these to you is just due to the fact that you can take some of these ideas and some of these rules that I have and kind of create your own trading plan, kind of create your own set of rules. It doesn't have to be word for word what I have. Also, if you kind of want to read through after this video and kind of, see what I have, and you kind of miss some things, join the Discord or go to the My Trading Rules channel in Evolution Traders, and they will be right there posted for all of you guys. So first things first is have a plan, follow the plan, work the plan. If we don't have a game plan going into the day, whether that be from the night prior or pre-market, you're really setting yourself up for failure. So I kind of always have, a handful of stocks that I've kind of looked out, marked out some key levels, some stocks that I am long biased in, some stocks that I am short biased in, and kind of just have a plan, of what I want to trade for the day. Let's say those handful of stocks that I am trading, let's say they're not setting up, they're not giving me the proper setup. The next rule here is to stop searching for the next best thing. So a lot of times when you're watching a particular stock, maybe you're waiting for it to get to a level, maybe you're waiting for a breakdown or a breakout, and it's not really doing what you want it to do. The first thing you have a tendency to do is want to look at your watch list, want to go to social media, see what other people are trading. You want to know what's moving. You want to jump on, the first green candle, you want to jump on the first red candle short, and you kind of get distracted. Stay focused, and focus, which is going to lead me into the next one. Focus on a handful of stocks to trade. Currently I have 1 to 6 stocks that I currently trade day in and day out. Now, whether they set up for me every single day is another story, but some of those stocks that I like to trade: Tesla, Amazon, Apple, AMD, Nvidia, Facebook, Netflix, Microsoft is sprinkled in there. So I have a core group of stocks that I like to trade. And then I also have maybe 4 or 5 secondary stocks that are always on my watch list, and I'm kind of always watching them to kind of see what they're doing. And some of those stocks might be things like, let's see, like a Google, maybe like a JP Morgan Chase, Goldman Sachs, PayPal, Square, GME, AMC. Some of these other stocks I'll have on my watch list: Shopify, I'll put these stocks on my watch list and I'm always kind of checking in on them. However, I'm not solely focused on them. It's not my core group, but however, if my core group of stocks is for that day not setting up, they're not doing what I want them to do, I'll kind of scan through and see, is there any other good setups on the secondary stocks that I'm currently watching? Next thing here is patience, guys. If you do not have patience, you will not make it too far. And this is something that I struggle with a lot, depending on the day and the price action, especially more so on days when we have these big gap ups or these big gap downs. I start to really get antsy right off of the bell. I want to kind of jump into the first thing that's moving. And a lot of times when I do that, when I take a trade, let's say within the first 1 to 5 minutes, I would say 6, 7 times that trade comes back to slap me in the face. So I'll get into that trade. I'll get in on that momentum. I'll see the P&L go up, up, up. And then within a blink of an eye, it completely wicks against me. And now I'm holding this losing trade. And now I'm trying to scramble and create a new plan to try to get out of that trade or kind of see where it could possibly base out. And when that happens, I kind of know mentally that the trade has already defeated me. For one thing, I wasn't patient enough to kind of let the momentum play out, let the day kind of just pan out. If, let's say, for example, I'm watching Tesla and I'll just use just round numbers here. I'm watching a 1150 break on Tesla and it kind of breaks 1150 and it goes 1150, 1155, 1160, 1170. And now I'm starting to get anxious. I should have taken that scalp right off the break. And, it never comes in. It never takes a dip, just completely rides all day. You have to be okay with letting that trade go. Okay. That money was not meant for you. What you would like to see is if you're watching the 1150 break 1150, go to, let's say, put in a new high at 1160, come back down and test that 1150, kind of consolidate there and then get that nice pop up. And then now your second entry would be either taking that flag breakout on the break of trend or through that second entry of that 1160 price. You just kind of have to stay patient. The last thing you want to do is, jump in on an 1150 breakout candle, immediately scream within 30 seconds to a minute to 1160. You think that you're in the money. You think that the day is secured. And then next candle opens up and it completely wicks against you, goes down, test the 1150 support, breaks down, and now finds some support at around 1140 and starts to consolidate. And now you're 10, 15 points out of the money on this losing trade. Just kind of be patient, guys. If you miss a trade, it's okay. The stock market's been open for 100 years. As long as you're in the game, you're going to catch a trade. The more trades that you catch, the more money you'll be able to make. The more disciplined you stay, the better off your portfolio is going to be. When you start to chase things and you start to feel like you're missing out on that big move, is a time when you're really going to hurt yourself just due to the fact that you're trading to chase the gains. And when you do that, you can end up, taking one large paper cut or a million paper cuts that kind of just eat away at your account. Another rule that I've kind of got around to is stop, like what I just spoke about, is stop chasing the explosive moves, whether that be to the upside or the downside in the first 1 to 15 minutes of the day. Allow things to set up. For me, some of the best trades that I've had, day trading wise, as well as scalping, have come when, I kind of let the market play out for the first 1 to 15 minutes. I kind of let the chart set up, kind of get a bias. Does the chart and does the stock want to take control and go higher? Or are we testing previous day's highs and are we going to roll over for perhaps an inside bar day or perhaps a lower red day? A lot of times, a lot of fake outs are going to come within the first 1 to 15 minutes. You kind of want to let that price action do its thing. Now, that's not to take anything away from any scalper who plays the first, maybe 2-minute candle or the first 5-minute candle, or maybe you let that first 5-minute candle open up, set in a range, and then now you're scalping to the upside or to the downside based off of that first 1-minute candle, 2-minute candle, or 5-minute candle. But you have to be very, very experienced. And for even as long as I've been trading, it doesn't fit my personality. Have I done it before and made money? Yes. Have I done it and also got my face ripped off and lost a lot of money? Yes. So for me personally, as a trader, I know that I do better when I enter trades after I kind of let the direction and the first 15 minutes of the market and the volatility kind of play out. And then I even do better after the first 30 minutes of the day. Okay. So, I just see the charts better. I just react emotionally better. And, it's just something for me. Everyone is different. It all comes down to your trading style and personality. If a stock opens, explodes, flushes at the open, and never looks back, dips, or bounces to give you a good setup, leave it alone. Sometimes all money is not your money. Remember that. So I kind of spoke about that previously. The goal of this game is to stay in the game. So I kind of want you to think about that for a second. If you are so anxious to catch every single big move, and you're so anxious to catch every single play, guys, stocks move up and down every single day. There's a handful of stocks that are going to run. There's a handful of stocks that are going to flush. You are never going to catch them all. You're never even going to catch half of them. You won't even catch a handful of them. All you realistically need to do is just catch 1 to 2 trades. Even one trade sometimes can really make your day. It can make your week. And sometimes if you're in at the right spot, you're in on the right trend, the market is helping you with a little bit of help from the indexes behind you, you can even make your month in one trade. A lot of times when you start to try to catch everything, you're missing what's going on right in front of you. Okay. So the longer you stay in this game, the more experience you're going to gain, the more comfortable you're going to be with the charts, the more less anxious you're going to be when it comes to trading. So the whole key is just to continue to stay in this game so you can catch those bigger trades later on down the road. Small wins add up over time. Allow your wins to compound. What seems like a small win today will get larger over time the longer you stay in this game. So I know, especially in the beginning when I first started, sometimes I would have a $20 winner or $100 winner, and I would think back to myself and I'd be like, you know what, man, like what am I going to do with $20? What am I going to do with $100? I can't live off of this. I can't. This is not going to make me rich. So then I start, trying to go for the big fish. I try to start making, hundreds of dollars per trade, or I try to hit that one trade that's going to bring me in, a couple thousand, or, I risk too much of my portfolio and end up taking a big hit. The problem with that, guys, is when you start chasing the numbers, you really start working against yourself. And what I mean by that is that if you just focus on taking the right setups, the proper setups, and the setups that work for you more times than not, regardless if you take $50 on the trade, regardless if you take $100 on the trade, regardless if you make $200 on the trade, those small wins are going to start to add up. And over time, you'll be able to increase your position sizings to where that $50 win now becomes a $100 win. That $100 win now is not just no longer a $100 win. It might be a $200 win, a $300 win. That big day that you had where you nailed the trade, you nailed the strategy, and it's a $500 winner might be $2,000-$3,000 as your position sizing increases. But you can't just start trading with, let's say, $2,000 and think that you're always going to consistently hit that $500 options trade, that $1,000 options trade, that 100% $2,000 winner. It's just not going to happen. If you do start to fall into that where you're always chasing that big winner, you're going to take some big losses along the way. And sooner than later, you're going to find yourself blowing up your account or being down 50, 60, 70% on your total account versus having an account, whether you're trading a small account, $1,000, $2,000, $3,000, $5,000, and taking that $100 win, $80 win, $70 win. In 2 weeks' time, you just added, maybe $1,000 to your account, $500 to your account. In 2 or 3 months' time, maybe you added $2,000, $3,000 to your account. So now you're no longer trading with that $5,000 account. You have a $7,000, $8,000, $9,000 account. So you can gradually start to increase your position sizing. That's going to increase your wins. Sometimes your losses seem large at the time and you do not want to cut ties. Stop hoping for a reversal in your move to try to go either break even or green. Instead, take your small loss, move along to another setup, as sometimes that what seemed like a large loss on a failed move at the time can turn into a bleeder that can wreck your account and your emotions. So what I mean by that is sometimes you get into a trade, and this happens with any strategy, happens with my strategy, happens with a lot of strategies, a lot of indicators. You know, nothing is perfect. Nothing is 100% winner. Nothing is for sure. This is the markets. The markets can do whatever they want. It's up to us to kind of trade what the market is giving us. So with that being said, is sometimes the chart pattern, the strategy, you know, the setup looks amazing. It looks fantastic. Like if you take this entry, it's going to go. And sometimes it kind of fakes you out. Maybe it does go very fast, wicks back, kind of loses that support and then breaks down. Let's say, for example, you had, you know, at the time when that trade failed, it was a $100 loss, a $300 loss at the time. And you tell yourself, you know what, this chart pattern was so good. My entry was so good. The strategy is so good. The whole market is so strong. This stock is going to bounce. This stock is going to come back. Let me hold this until I break even and then I'll just cut it. Let me hold this because maybe I will break even and maybe the trade comes back 3 hours from now and now I'm in the green. Guess what happens? The trade has already defeated you. The minute you start doing that, the minute you stop being disciplined, and what happens is the more times you do that and you allow yourself to do that, yes, maybe this one time, that $200 loss, okay, that you should have taken, maybe it does bounce back, break even. Maybe it does bounce back 2 hours later and you end up green on the day. Maybe that does happen. And not to say that it doesn't happen, because it does happen, but let's say that time where you tell yourself that and you do not cut that $100, $200 loss right when the move failed the first time, and the move doesn't come back, and now you're down 400. Okay. And you tell yourself the same thing. Well, if I can just recuperate that $200, I'm okay with the $200 loss now versus the $400 loss. And sometimes that trade turns into an all-day hold. Sometimes you swing it overnight and the market gaps down, and now that $400 loss becomes a $700 loss. And now you're sitting back and you're telling yourself, man, I wish that I just would have taken the $100 loss. I just wish that I would have taken the $200 loss. Okay. So we have to follow our trading plan and our rules, regardless if it works or it fails, because the more times you stick to the plan, your winners will outweigh the losers if you stick to the plan. We can go on a string of 1, 2, 3, 4, 5, 6 winning trades and not stick to our rules and not be disciplined on one trade and give all those profits back in one trade. It's happened to me before. I've had 2, 3 good winning trades, been up $2,000, $3,000, taken one bad trade, lost $1,500, lost 50% of my gains over the past 2 days, 3 days in one single bad trade because I wasn't disciplined. Okay. So this game is 99% mental. There are millions of strategies that work, a ton of indicators you can use. There is no holy grail, 100% winning strategy. Control your mental side and you control your future. If you cannot follow the script, the plan, your rules, what does it matter how good anyone's strategy is, your strategy or indicator is at the end of the days? So kind of take that, if trading is 99% mental, anybody can read a chart. Anybody can see supply and demand zones. Anybody can see the moving averages. Anybody can use the RSI. Anybody can use the VWAP. Anybody can see previous days high, previous days low. Anybody can see that. But if you are not mentally confident enough to take that play when it presents it to yourself, what good are you? If you are not emotionally stable enough to cut that loss when the trade failed, what good are you? Okay. Again, this is listed a few times. Stay patient. Okay. The market's been open for 100 years. The market's going to be open tomorrow. It's going to be open the day after that. If you miss a trade, oh well. Okay. Oh well, this is a tough business here. This business is meant for a lot of people to come in, put their money, lose and leave. Okay. The people who stick around are the people who are the most disciplined and the people who are the most patient. Okay. A long-term investor will always win because they're patient. Okay. They're not letting the daily ups and downs and the emotions get to you. So if you're going to choose this game and you're going to choose this day trading lifestyle, this scalping lifestyle, you have to be one of the most patient people on earth. And you have to be also one of the most disciplined people on earth. If you are not disciplined in every other aspect of your life, like let's say, for example, you wake up every morning, you don't brush your teeth, you don't make your bed, you don't wash the dishes after dinner. You don't pick up your clothes, put them in the hamper. You don't, um, if you're not disciplined, you don't wash your car for 2 or 3 months, then how do you expect to be disciplined when it comes to trading? Think about it, guys. Trading revolves and it, correlates with real life. Stock market has been around for 100 years. I already mentioned that. I'm not missing the boat. I am not missing out on the last chance to make money. Just think about that. Okay. If you do miss out on something, um, stock market's going to be here tomorrow. Take a deep breath. What I may miss today saved me from chasing the loss I will regret tomorrow. So if you miss something and now you're chasing or you're looking for that good play and now you take a big loss, okay, doesn't feel good. If you miss something, you missed it, guys. Wait for the next setup. You could chase something later on in the day, or because you feel like you missed out, trying to recuperate those gains that you never had. And now this loss turns into something that you're just stewing about, and it's boiling in your brain, going into the night and into tomorrow. Stop watching your P&L. I did this recently, actually. I used to switch between this, this idea on and off. And I just kind of recently, again, found out that this has helped me tremendously. So stop watching your P&L go up and down. After I entered the trade, this causes me to emotionally cut gains too early and to sell for losses that never triggered a technical reason to exit. And if I do get a technical reason to exit my trade, have confidence in my plan to follow the rules, even if I miss out on a reversal. This will save myself from holding a loser that is 1x, 2x into amount that is 3x, 4x amount. Okay, so what I mean by that is, a lot of times I would enter into a trade, the trade would start to work in my favor. I would see my P&L go green, 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 green. Okay. And then I would cut the winner. Yes, taking profits is good. However, I cut the profits too early. Okay. And in this game, we have to be patient enough to let the runners run. If the runners can never run, we will never start to really grow that trading account. Now, is taking a profit better than losing? Of course it is. But if you have a technical reason for entering this trade and a technical reason for exiting the trade, and either one of those technical levels has not been met, why are we exiting and deviating from the plan? Okay. If we're entering in AMD at 150 and our price target is 153, why are we exiting at 151? Okay. To soon say 2 hours later, we should have held because the stock is now trading at 153.50. Makes no sense. Just like if we enter the trade at 150 break and it goes up to 150.75 and then reverses, and now the trade is at 149.25 and that is our stop loss. Why are we still holding this trade at 147? Does that make sense? No, it doesn't. So have confidence, follow your trading plan and your rules that you have set out for you. Focus on the same setup day in and day out. Stop seeking new entries, forcing trades because the market is green or because the market is red. Guys, we can't go from, wanting to scalp the open to trading the bounce to playing the RSI to playing the VWAP to playing the moving averages to, playing the short squeeze to playing this to playing what's hot on Twitter to playing what's hot on YouTube. Guys, you're never going to be consistent if you're always bouncing around. Okay. Just think about it like this. If I'm a baseball player and I start, like it's like this, guys. I'm going to use this analogy. Some of you guys might get it. Some of you guys might not. But if I'm a baseball player and I step into the batter's box and one day I'm batting right-handed, one day I'm batting left-handed, one day I'm wearing a helmet over my eyes and the next day I'm wearing no shoe. One day I have one batting glove on. The next day I have no batting gloves on. One day I come up and I'm chewing gum. The next day I'm not chewing gum. One day I'm swinging at the first pitch and the next day I'm not swinging at any pitches. One day I tell myself I'm not going to swing at the curveball and the next day I'm swinging at every curveball. If we are completely inconsistent, how are we ever going to have consistent gains? Okay. Think about that. Let that sink in. Never think, always react. The company is overvalued. Time to short it. No one gives a shit. Okay. The stock's been going up for 5 days. It's time to short it. No one gives a shit. Okay. The stock's going higher in 3 months. I should buy this bottom. No one gives a shit. Guys, stop worrying about what the news says. Stop worrying about what happened on earnings. If you're not an investor, none of that shit matters. If you're trading price action, what matters is the price action that's going on your chart right in front of you. Okay. Doesn't matter if you think it doesn't matter if Tesla's up $100 in 2 days and you think that it's too high, so you think it's time to short it. Doesn't matter. Momentum's going to blow right through you, and the bulls are going to steamroll right over your bare ass. Okay, so just think about that. Never think, always react. React to the price action. So, you know, goes back to what I just kind of said. Backtest your entries and exits daily where you see you made mistakes. See what you did wrong. Think about the day and how did you feel during that time when you took the trade? How emotional were you? So I'm a king of going back and kind of looking at the charts when I'm done with the trade. Did I hold too long? Should I have sold this? Why did I sell when I didn't meet my price target? Why did I hold this too long underneath my stop loss? I'm the king of going through and back testing. You know, I love to go back and look at the chart and kind of see where I fucked up. And it'll really make sense for you too once you start doing that. If you enter a trade and you're too nervous about losing money, you're anxious, you're antsy or anxious, you're sized way too large. Go back to trading one contract if you're an options trader, or size down 50% if you're trading equities. Focus on rebuilding your confidence. Guys, sometimes I've had 2 or 3 winning days and then I start to get a little ballsy, and instead of taking 5 contracts, I take 10. Instead of taking 3 contracts, I start taking 7. You know, and then I take that one big loss, and then, you know, it's like, well, why did I do that? Or I'll take, you know, normally I play Tesla, I'll take 1 to 3 contracts, or I'll take 2 to 3 contracts on Tesla, and I'm feeling ballsy and I take 6 contracts. You know, and then as soon as I get into those 6 contracts, I feel like I want to look at the P&L, and I'm looking at the P&L and I'm like, oh man, I'm down 100, down 200, down 300. Oh, I'm up 300. The emotions are too high because I'm oversized. I take 2 to 3 contracts on Tesla. I can stomach the ups and the downs. I take 5, 6, 7 contracts on Tesla. I'm an emotional wreck. That's just me as a trader. Over time, you get more comfortable as your trading P&L grows and as you have more years of experience. I've been trading for years already, and now still taking 3 to 5 contracts on Amazon, still as a scalper, has me, you know, going crazy. Now, I know people that are out there that take 10, 20, 30, 40 contracts on Amazon, you know, and they can stomach those drawdowns of 5, 10, 15,000. For me personally, I can't. Everybody is different. Okay. Everybody is different. Trust your plan. There's no reason to doubt what's a system that works. What doesn't work is thinking you know more than what the chart is showing you, guys. So, you know, even when you enter a trade and you're following your trading plan and you start thinking, well, maybe it's going to stop here. Maybe it's going to bounce here. You know, don't. There's no reason to think. What you're watching on the screen is your strategy and the chart price action play out. If it confirms a specific level and everything is technically okay, let the trade work in your favor. If the trade confirms a specific level and then fails, get out of the trade. There is no thinking anymore. You have a plan for a reason, follow the plan. Do not overtrade if in the market. If I lose 3 day trades in a row and I go, let's say I lose 3 day trades, I immediately stop trading. Okay. The more you trade after, you know, consistent losing is going to cause you to chase. Okay. And when you start chasing, you're going to take a million paper cuts that are going to cause you to bleed to death. Okay. Stop chasing again. Stop being emotional. Let's say I take 1 winning trade and I'm up $500, and I take 1 trade and it's a loser and I'm down $300. So now my profit for the day, net profit, is $200. I take that 3rd trade for the day and I lose, and now I'm down another $100. I will just stop trading. I will just take the $100 for the day and I will just stop trading. Okay. I hope that kind of helps. Guys, if you like this video, you want more content like this, subscribe to the channel, leave me a comment, give me a thumbs up, join my Discord, and until next time, I will see you guys all on the next video.